Yeah, so I had to grab some water myself, so feel free to mill around. Dr. Ellen, you perfectly set, I've been thinking about this as I sat on the chair. You perfectly set up me to describe how I develop a project that if I worked for Ducks Unlimited, I would get fired. Because this is exactly what the Nature Conservancy and some of the folks that I work with are exploring. And I really hope that this will be seen as really as an opportunity to co-develop. That's the way I'm going to offer this up, because I've got a lot of partners in this room. We don't get a chance to see each other and spend time at the table like we did 2 years ago. So developing projects has just been tough. It's been tough through Zoom. This conservation delivery network was created specifically to do that, to bring partners together, to share ideas, to share opportunities, collaborate, and build better conservation results together rather than independently. So I'm just going to use that as this top caveat. This is not Jason's idea, and this is going to work, and y'all are going to see how it goes. Quite the opposite. This is very much a work in progress, and I'm giving you the opportunity to edit, question, comment, and I think your presentation was perfect, just sort of setting that up, and hopefully the terminology will be more familiar. Is this what works here? Nope, that's not the one that works. Maybe I'm just not smart enough to figure it out, which is possible. All right, so I'm going to stay here then. And it looks like I'm going to open this chat real quick before I get going. Okay. Thanks, Dave. Appreciate that, Dave.
We have about 10 people virtually on, so I'm kind of, if they have questions,
There. Make sure I advance this thing correctly. Well, so, I mean, at a super high level, the goal of this project is to do sort of what we were talking about. It's to get more conservation on the ground. And it's specifically reforestation on the ground. Correct that if we want to significantly reduce, global warming, greenhouse gas, in the atmosphere, we'll have to do a lot of work on reducing our emissions. But in addition to reducing our emissions, almost everybody would agree, we got to plant a hell of a lot more trees. And that's easier said than done. So the goal is to develop a mechanism that takes this global recognition that needs to happen, the sort of global increasing demand in financing that through either the financial sector or ag supply chain sector, others that have the capital and the goals and have gone public now. I think it's a running list, but the last time I checked and gave this presentation, it's something like 3,200 companies currently publicly pledging net zero carbon emissions by 2050. It's a bunch. And of those 3,200, most of them are really big companies that have a lot of money. And they're shifting sort of their money from business as usual to research and development to help them figure out how to do this. And the short answer is they don't know how to do this. And they're going to be looking towards the conservation community to help them understand how to do this. So it's up to us to kind of figure it out. So the setting, we're in the Delta. For those of you who don't know me, I've worked in the Delta for about 20 years. First for U.S. Fish and Wildlife Service, and then for Ducks Unlimited, and then the state. Maybe I worked for Game and Fish for a short period of time, maybe the State Natural Heritage Commission for a short period of time. And then I landed at TNC, and that seemed to be a pretty good fit. And I've been at TNC now for 16 years and working in the Delta specifically for the Nature Conservancy since 2010. Most of my work has been in reforestation. So thank goodness USDA has this wonderful wetland reserve program. It's extremely popular in Arkansas. We've got partners in the room like Randy Childress and Amanda Mathis that are the grease to making those projects one of the most successful recognized projects in the nation. In Arkansas alone, we do probably what, 5,000 to 7,000 acres of reforestation a year through that program, which just blows everybody else out of the water. We've got when you add Arkansas, Mississippi, and Louisiana together, 25, let's see, the last Farm Bill, we celebrated 25 years of WRP and over 700,000 acres of reforestation during that period of time. So if you include the easement works that the Game and Fish has done and DU and Nature Conservancy and private investors, we're talking about 1 million acres probably of reforestation and protection in the last 30 years, just in the lower Mississippi alluvial valley. Nowhere else in the United States is that scale of impact happening. And that's where this project really builds off the experience in doing that, the relationships, the understanding of how that works, and quite frankly, the demand that continues in that space. What's really even more unique now is climate change. I'm just going to say it out there. You may not agree that it's human caused or why it's caused. It doesn't matter. Landowners and farmers are experiencing real life impacts that everyone will tell you. The weather is different now, regardless of how it got here or why. For the first time in 2021, we had over $1 billion climate disasters in the United States. And the year before that, it was also record, it was 15. Most of those weather-related impacts are coming right up and down the Mississippi River, whether you hurricanes, thunderstorms, you name it. It's a lot of water and it's getting dumped on the lower Mississippi River Valley. And we expect that also to increase. Most of your models, NOAA models, and long-term projection models conservatively anticipate a 30% increase in frequency and duration of rainfall throughout the coming decades. The really scary models are up to 130%. So that's a lot of water coming into this geography. And if you talk to farmers, a lot of it's already coming. It's coming a lot more frequently than they've ever seen. It's hitting these floodplains. And so what the Nature Conservancy has started doing is working with partners across the whole basin to really identify where are the most vulnerable areas to climate change. And we're finding these floodplains is really where the rubber meets the road. Your 5, 10, and even up to 100-year floodplains across the Mississippi Basin are in the acre, just in our priority area. We're talking about 11 million acres of 100-year floodplain that's currently cleared for agricultural production. But that's just in our priority. So that's a lot of footprint that has potential for economic impact in our economy. The other cool thing about floodplains is all the other conservation that we work on interface with floodplains. So you're talking about water quality, impacts in floodplains, water quantity, habitat, that's where your waterfowl are, vulnerable communities. Some of our producers only had access to floodplain, so they're disproportionately affected as well. There's a lot of interactions that occur in the floodplain, and then not the least of which, it's really where the best opportunities for conservation exist to the least impact to some of these other sources of activity, whether it's farmland or whatever. So we get to do what we know we want to do in a study so that the risk is for anything else. That's really what it boils down to. 360, my DU guys are probably going to gut check on this. What, 360 species of migratory birds up and down, plus up and down the Mississippi Flyway. If you reforested just a fraction, we're talking maybe 1 million acres of 100-year floodplain in the lower Mississippi River Valley. We can identify that through our own partners. We've used these habitat models. We understand where the best places to do reforestation occur, and we can identify those in floodplains. Of course, if you reforest a floodplain that's currently in agriculture and your objective is to reduce water quality, that's going to have a major impact. That's where the water and the farm meet, is where a disproportionate amount of your sediment and nutrients is entering the waterways. So you put that back into forest, you're going to have a big impact on water quality. As I mentioned on groundwater, we know that those seams for groundwater recharge are in those stream channels. So you reforest those, you're getting more groundwater control, groundwater recharge, excuse me. We also understand that there's some real significant impact being felt in a lot of this floodplain. The Environmental Working Group has been studying crop insurance for the last several years and have really identified through a recent report that approximately 35 counties up and down the lower Mississippi River Valley experience above average crop insurance payments every single year. And within those counties, those impacts are happening in the floodplain. So even within these counties, we know that these environmental impacts are happening essentially in the same place year in and year out, to the tune of billions of dollars. These are areas that are not just concerning to conservationists, but they're concerning to the landowners who make a living there. They're running out of options other than getting crop insurance in some places. And they're signing up for WRP, understandably. But there's not enough WRP to go around to meet the demand. We have our prioritizations for conservation, building refuges. We know where we want conservation to land, and WRP is a fantastic vehicle to getting those lands enrolled. But there's a lot of people out there who have a lot of trouble getting access to WRP. Either they're not in the priority area, or they own smaller pieces of land that don't compete well with big contracts. They don't have access to the programs. There's not enough money to meet the demand. So if we understand that there's a lot of people who want this, not just landowners, there's a lot of companies, investors who want this. There's some big impacts, negative, that are happening on the ground that we know floodplains and forests are uniquely designed to provide benefits for. Our job is to just connect those dots. And yet, it's risky, right? We know that carbon per se is not maybe the only thing that makes this happen, but it has to happen. And we just have to figure out how to do that. And so the Nature Conservancy is working on it. And I'm here to ask you guys to help me work on it. Because we've got ideas, we've got some experience, but the Nature Conservancy at its best doesn't do anything by itself. It takes a village. It takes you in this room, it takes the landowners that we work with day in and day out, financial institutions, those wonky folks that understand how to build blended finance models and can do mezzanine structures and figure out that if you do bond rates and return rates and flip things upside down and inside out, somebody's still making money. And it's really just taking all of that stuff and putting it to play in what could be, a transformational way to finance conservation. So this is super high level, but in a nutshell, you've got the investors. So you've got these hedge funds, you've got university pensions funds that are they're actually looking to take $1 billion and put it in a project for the next 40 years and watch it grow at 3%. That's exactly what they want to do with their money. It's a lot less risky than putting it in the stock market. They're not looking to, get 5, 6, 7%. They're just looking to do, and they're looking to do something good for the environment. That's this kind of project. So the landowners, obviously, many of them have to receive some kind of funding to switch that land use. They've got their own bills to pay. If I showed up to a landowner and said, I've got this great idea, you need to reforest part of your farm. Here's a bunch of trees. You'll love it. He is, or she is going to laugh me off the farm. That's not going to get it done. I have to provide them with the means to do that. That's what WRP does. It purchases that right to access their property and do something different with it. Otherwise, they can't do it. It's us, we've got to do what we do best and the relationships that we have. And then at the end of the day, there is this demand for carbon. And I think I don't share it in another way, sort of explicitly, but as she described it, it's not mutually exclusive from some good forest management and some good forest products down the road. So if we're planting more trees and we know we're using the interest in those trees, up front, we've got carbon that's coming a little ways down the road. There's also fiber and timber that's also down the road, and that has to be built into the mix. So this is the value proposition for these different entities. So the investors, they get to contribute. They get to not only do what they do with their money in an expected way, but they also, there's a class of investors now that's growing called impact investors. And the impact investor firms are not just looking for the economic returns, but they're investing in social benefit returns. In fact, the UN has this whole class of what they call environmental, social, and governance metrics that these board of directors are all using on their own company, whether it's Microsoft or Amazon or timber company, you name it. Their board are saying, I'm a part of this board. I've got my money here. My reputation's at stake. What are your environmental, social governance metrics? And so companies are having to figure that out. And now they're being held to task to deliver on those. And impact investment is focused on not just that economic return, but on that environmental, social governance metric as well. And they don't have, frankly, a pipeline of partners that can just go and do that and hand it to them. That's us. Obviously, the landowners, we're not trying to get landowners out of farming. That's not the goal. But if you've ever spent a little bit of time talking to farmers, especially in the Delta, they will tell you some of this ground never should have been cleared. And that's just a fact. And unfortunately, that number is probably going up as a result of the weather changes that we're experiencing from climate change. So the ground that was marginal 10 years ago is really marginal today. If the alternative is, I've got this ground, I'm trying to make money on it. It used to flood every 4 years. Now it's flooding every other year. I guess I'll just put all my money into it again, and hopefully it'll work out for me. That's getting pretty old. And prices and margins for profitability are getting really small. And so it becomes harder and harder and harder to roll the dice on a piece of ground that has got a 50-50 shot going underwater, at least for a long enough time that you're not going to get the yield that you need to make money on it. So they're looking for these alternatives. And as we said, if you're in Cache River Bottoms and you've got enough acres that you can compete for WRE, that's your ticket. You're going to sign up and you're going to participate. And I'm grateful that it's there. But if you're in another part of the state that's not next to a refuge, or you only got 100 acres to your name that you're worried about, your chances of getting in WRE are much less. you're still faced with the same problem. So we're trying to create a pipeline that can meet those landowners' demands as well. And in addition to just getting that risky ground off, now you're developing a long-term diversified revenue stream that includes, maybe it's carbon, maybe now you can rent that ground for hunting and get a couple, $50, $100 an acre now to lease it. Plus you're developing a sustainable timber revenue plan that's going to work down, and it may not see the benefit to you tomorrow, but landowners will tell you, look, this is my grandfather's land. This is my great-grandfather's land. This land's important to me. And now we're giving them the tools to take that land and hand it down to their great-grandson or their great-granddaughter with a plan that's based in the knowledge that those particular acres are going to be really hard to farm in the next couple of years. And so I want to keep this farm. I want to keep it in my family. So I'm developing the tools that will allow that to stay in my family, even though it may look different than growing soybeans. That's important. Obviously, I don't have to spell why we're interested in this. This gets conservation on the ground. And I like what Dr. Ellen said about having habitat. I mean, that's what we're in the business of creating, is habitat. And we need a lot more of it. Species of decline, water quality impacts. This is not the new way, but a new way to further increase our own opportunities. I think I've already said enough about this. I probably don't need to. Again, we're not going to, this is not to say that carbon is the only thing, the next best thing. It's a thing, and it's worth utilizing as a tool to helping us achieve our objectives. And there's lots of folks out there who are willing to provide us with the revenue and the capital to do exactly what we do. We just have to introduce them to the landowner and give them a structured pipeline that they can see so that everybody's getting what they need. So Nature Conservancy, I'll go through less stuff a little bit quicker. So I've been working on this. Some of the folks in this room and outside as an organization really started doing hard homework. About this time last year, we've got an organizational agreement with Bain and Company, which is a big finance organization. They provided some pro bono help. We did some baseline research on what it would take, what kind of returns we would look like, and what are the costs. Long story short, just like it was already described, like, ooh, it's going to be kind of a low return and kind of a long time before you get your return back. So we're going to have to figure this out. But that's what we're working on. Use that to propel some work with Harvard Business School. We did a survey of landowners, actually sent out 6,000 surveys to landowners across the Delta and asked them, what would you participate in? DU helped us with that. UALR helped us with that. KKC organization helped us with that to make sure that our messaging of our survey was getting to all of the producers. We've learned that we still need to work on that, but it's an important part. And I think Dr. Riley, I say Dr. Riley, Willard here will agree with me that historically underserved landowners have a harder time in getting access to this stuff, and our survey reflected that. So we're going to double down efforts and try to understand that better, potentially work on some heirs property issues together to help address that, bring some new capital, access to capital that historic underserved. It's not necessarily tied to the Farm Bill and some of those eligibility requirements, but nonetheless, we're working on it. We've gotten some support within our organizational. We're sort of building, socializing this idea within our own region and North American programs, because it's the Nature Conservancies is good, but they're also a bit risk averse. We've been hit over the head a couple of times recently in the press about our carbon projects. So we got to be really, really careful of how we do things and what they look like. Had some conversations with some big banks, had some conversations with some local banks. Winrock International, if you don't know that, that's originally started in Arkansas. So we've got roots here. The Nature Conservancy has something called a market lab. It was started in California that's specifically designed for developing new market tools. And we're developing a relationship with the American Forest Foundation. If you're not aware, TNC and the American Forest Foundation already work together on a carbon project. It's called the Family Forest Carbon Program, and it specifically targets small forest holders and gives them incentives to do improved forest management. And then they use that improved forest management techniques to then generate carbon credits and allows those smaller family-owned forests to participate in this market without having to aggregate, with a big developer. So we're using that relationship and some of those tools, before I forget, to help us scale up the reforestation side of that. And it involves, verifying things across a bigger landscape. Quickly, what we heard from the landowners is, how much of your land actually floods. We got a lot of responses that were, up to 70, probably 2/3 of responses provided some indication that yes, some of my land floods frequently enough that causes me economic damage. That's how we define frequently flooded. But a big portion of these, 60%, we're only talking about 25% or less of their land. So we're not talking about whole farms. Most farmers out here, they farm, somewhere between 2,000 and 10,000 acres. I think the average is like 3,500 in the Delta. So we're not talking about taking a whole farm out of production. We're talking about a couple fields, some of your worst producer, one of your worst yield producers, taking those out of production, which is great because it helps us just reestablish that we're not interested in getting farmers out of farming. We're just interested in getting the stuff that's not working for them out of farming. And not surprisingly, we heard from them that the programs that the USDA administers, like CRP and WRP, are familiar, and those are the structures that they're looking for. 15 or 30-year agreements with some annual payments or payments that add up annually to what they're currently offering in WRP. So I think that USDA has done a good job of sort of establishing the market for how much those lands are, and that's what we heard. So where are we in our funding? So we're in phase 1, which, if you'll notice, is year 0. So that means this is not on the ground. We're in fact, I was being honest when I say we're in the co-development phase. We're in the research and development. We're talking to landowners, talking to partners, talking to investors, talking to banks, really trying to figure out what the wiring of something like this would need to be. Talking to USDA, understanding if there's a role for them, if not through a program, but through maybe some other avenues, whether it's crop insurance or whether it's just providing some sort of USDA loan guarantees or other things that helps bridge that gap between project initiation and revenue generation. Phase 2, reforestation, that's where we're planting things on the ground. And then we know, as we've already heard, that it's likely, I would argue, maybe incorrectly, that we could generate carbon sooner than 30 years, just not a ton of it, right? So it's about getting to scale. It's not doing 100-acre project. It's about doing 100-acre project, or even more than that. We're talking about aggregating landowners at the tens of thousands of acres, because we think that that's possible. Once those forests are planted, and this is a rolling sort of average, right? So you've got projects that you initiate every year, and so they all come in different ages. But over the course of a 5 to 10 year period, your investors are going to want basically all their money on the table. And so you're quickly ramping up your reforestation, and then you move into a phase where you're mostly monitoring and doing other projects. And we hopefully, what the idea is that the Nature Conservancy is not creating this for TNC's benefit, that we're actually establishing a way for organizations to do this on their own, right? Ideally, I mean, in my mind, what I think makes a lot of sense is a farmer or a landowner who's got this back 40 that's not working for him, can go to his bank and instead of getting a loan to do, some improvement, whether that's a levee or something like that, that may or may not work for him, they can say, you know what, I'm just gonna go ahead and put that in trees and get involved in the carbon market. And my farm credit bureau is gonna help me do that. And they're gonna know, okay, well, this is the market, here's how this works. We'll give you the loan, here's the rate, go do that, and here's what you can expect. That's the idea. We're not there yet. So somebody's got to step out there and take this risk to sort of figure it out. And, that's a pretty good place for a nonprofit to work. And that's what we're trying to do. And then eventually we get out of these projects entirely. Like if our goal is to reforest, 1 million acres, for example, which we think is possible in the Delta without really negatively affecting agriculture. Well, the Nature Conservancy is not interested in owning another 1 million acres or even managing another 1 million acres. We're trying to set this up so that we have a way to say, yep, we've helped get this in reforestation. Now we're going to step back, let the market do its thing, and we don't have to be the ones that are actively involved. So that's really our end game. So where are we now? I mean, we're in the finalizing sort of the financing structure. We know that for this to work, it's likely going to be a blend, what they call a blended finance structure, which means you've got investors of different classes coming in sort of at different levels and in different times. And I won't begin to try to explain it to you because I don't understand it, quite frankly. But it's a blended finance structure that uses the Nature Conservancy's sort of whole wheelhouse of partners. So it's donors that are just giving to give. It's foundations like Walton Family Foundation, Winrock International, who have larger pots of money they want to invest in that. It's these impact investors, and then potentially even some equity investors who are interested in a little higher return but have bigger capital to share. And how you structure that is what we're trying to figure out. And then it's just launching, it's understanding that we've got some capital, we got enough capital that we can go ahead and start putting some of this on the ground. We won't have, everything we're ever going to need before we do it. There's a risk. So we'll have to figure out exactly how much capital we need to launch and get started. And then, pray that you guys have helped me figure out how to do this. I think Dr. Ellen mentioned the space is changing a little bit as far as carbon. The amount of carbon credits are actually on the open market, as far as I understand, through improved forest management and more conversion is going down quickly. And there's not enough carbon credits out there to meet even the current demand. And so you have actors in this space that are willing to prepay, sign up ahead of time. Yep, some of them call forward agreements or advanced market commitments. These are ways to sort of get things off the ground without having your carbon credits built yet. You just have to make sure you give it to them afterwards. And we're prioritizing where to start. I mean, the Nature Conservancy's worked with a lot of partners in this room for a lot of years to understand where the conservation opportunities are. And so it's matching those conservation opportunities with landowners who are not going to be well serviced by WRE, or they've got smaller tracts that are being impacted more frequently. So it's doing a lot of that prioritization to find out where the sweet spot is between a project that could benefit from this. And that's sort of those are the sort of main things we're working on right now, and I think it would be an opportunity for this group to help insert where you see yourself being valuable. So it's increasing our network for these strategic relationships. It's sort of peer review and figuring out that what we're doing is not in a vacuum, and that it's taking in the best science and the best minds, carbon developers, landowners, governments, conservation partners, and then it's developing the capital and the investments and the actual entities to do something on the ground that's worthwhile doing. And I'll just stop there and ask for questions or discussions or thoughts and ideas that hopefully I can provide an answer, not a good answer. So, yes, sir.
First of all, Jason, thank you. Question on WRE.
Huh?
There's a few companies out here developing carbon and they layer on carbon on top of the WRE contract. You know, we talked about the additionality principle earlier. What is PNC's thing when you talk about WRE? If you did carbon before WRE and then we're able to layer WRE's added benefit for that landowner?
I can give you TNC sort of perspective, but I would also open the room for others that have an opinion on it to share theirs as well. I think to the point of additionality and the fact that TNC has been sort of hit over the head on a number of projects, we see WRP or I'm using that colloquially, hope you'll forgive me, ASAP WRE. Thank you, Amanda. She gave me a thumbs up. That was okay. You know, I think, like I said, those projects are going to happen. If a landowner has, I would say this, if a landowner has the opportunity to develop a carbon project on that after it's been reforested, and that's the landowner's purview, and they're interested in doing that, that's more power to them. I don't think the Nature Conservancy as an organization is in a position to develop a carbon project on a WRE tract, especially one that we own, because we've been involved in buying land during the WRE. We probably couldn't, then do our own carbon project on top of that. But, what a landowner can and can't do is not for me to say. And I don't know that USDA prevents them from doing that. But I don't know the rules. So,
that's something you have to be a pretty slippery slope. Later you want on top of the existing. Federal government owns the surface rights to the properties. We'll be entering expansion improvement. Like Bill said, the U.S. emission program has emissions as well, and so not for carbon. Not that that's not a benefit.
I would imagine there would have to be some pretty tight, whatever the cooperative use agreements, that they were continuing to do some harvesting and how that would affect their buffer pool and all those sorts of things would be something that you have to figure out. And I don't know whether a landowner without some help, right, would really understand how to do that very well. Any other discussion? Questions?
Just curious, I mean, the idea of taking out unproductive land, do you guys have any sort of, is there any piece of this that sort of demonstrating return on investment for a landowner? Like, not only is there carbon revenue able further out, but the kind of work that's been done, like in the I-States and the Dakota is demonstrating that you're actually losing money on certain crop acres.
Yeah.
Input cost is higher than your returns, and then adding that to carbon and starting to build that more like holistic budget for a landowner.
I mean, I think the short answer is yes. If you've worked with farmers, they're pretty optimistic people. So it can be challenging to sit down with like a projection and say, this may not work out. But that's the truth, right? There's just land out there. You can look at yield data and see, I have friends that work in, brokerage for different commodities, and they'll tell you if they're not making, X amount of bushels of beans, they're not making any money on those beans. And the farmers know that. And so it's just having that conversation. Say, even if you just stopped farming and didn't put your inputs on this piece of ground, you're actually going to make more money this year than if you farm it. Now you layer on top of that an incentive payment and maintaining ownership and the prospect of developing carbon credits and potential sustainable harvest. That starts to become like a pretty sweet deal to those that are seeing those acres, that are really being impacted. Roger.
Hey, Jason, how are you? Just wanted to ask, when you're meeting with the financial gurus, people that deal with bonds and look at the money side, are they excited about this? Do they get it quickly? What do they think about it?
Yeah, so those conversations are, there's always excitement. And then, you know, as you crack into it and you start to get into the weeds, then the challenges start to manifest. Yeah, this is, okay, so we're not talking about 12% return, you know, no, we're not. We're not, you know, we're talking,
Okay, I just knew this was gonna be like 12% return, you know, and then it's, well, we've got a lot of capital up front, you know, we gotta build these forests from the ground. Okay, well, when do they start? And, you know, 5 to 10 years later, I don't know about that.
you know, so those conversations start to go,
You know, as you get into the meat of it, they become, you know, the challenges become more apparent. And that's not that they're unsolvable, but that's right where the work begins, right? You know, just show up and say, wow, you're gonna love this, everything about it. You know, so it's taking work. But, you know, I think part of it, the evolution of this space is still driving these conversations. I think we're going to see more, as it's already been mentioned, I think there's going to be more rules. We're gonna sort of tighten up what's allowable. I don't want to use the R word, the ugly R word, but I think we will start to see the government, you know, getting more involved in some of the voluntary market, you know, space, where just to de-risk some of these projects. So I think there's, all of that is sort of evolving. For me, this is the perfect time for an NGO to step out there and test some stuff. So that's what it boils down to. Convincing the right investors, the right people that this is worth trying now, because if we waited 20 years, we won't have enough time left to make a difference that we need to make.
So we have any sense what, inflation or interest rate will do to our
I mean, it's a radically changing space, isn't it? The bond, the bond market is more interesting right now than the stock market. So there's, the cost, I mean, it's rapidly and dynamically evolving as we speak. So the short answer is no, I don't. But I say our opportunities to get ahead are going down, and sort of the opportunity to do something now, regardless of the conditions, I think are still good.
So the desire of investors is driven not necessarily by good or keeping stable returns, but
I think stable is an important word. I think they're interested in stable, predictable returns, not necessarily market or great, just something. And to some extent, there's a hedge on carbon prices. We're seeing the value of carbon go up, grab quickly. So if you can get it under contract, now building credit or whatever, even at a high rate like $25 for deforestation rate, it's all those things. Closer to 50 for the same credit. So I think that's what I think is driving some of the interest.
Anything else, Jason?
Well, thanks, Dave. Thanks for the opportunity. I would genuinely like to follow up. So just, if we don't have a chance to visit this meeting, just feel free to give me an email and happy to talk. Thank you all very much.